live here now on a February 1320 call on the S&P 500 that seems to be in a very overbought category. And I can show you now what I'm talking about in this bar is you can see the lows here. Let's display it a little different for you. You can see this low here was $24.50 a contract for that 1320 call, which is now in the money. As of Friday, the S&P 500 ended up closing up 19.36 handles, which drove that 1320 call on the S&P 500 to all-time highs. Back in calendar date 12/7 of 2011, this contract was at a high of 25.37, and they were taken down in the bear to as low as 5.57, which was buyable up and out of the money, and that was 12/19 of 2011. That was for volatility. How far it would go, no one would know, but you can take a look at calendar 2012 that the low of the contract is $10 and it's yielding 29.50 on the high, and it's an in-the-money call. We're going to be watching that one carefully. Another one that we're going to be watching carefully is we're going to take a look at how inflated that some of these prices. Here's a 340 call on the S&P, okay, and that high was 1580. Yes, there were times that it was up here at $19.80, and that was back on 12/8/2011. So that S&P low of calendar 2012 was 440, and it's taken 1, 2, 3, 4 days of that bull rally breakout in the S&P on 1/30 of 2012. These were fairly cheap right over here. You could have bought them at $4.80, $5. So they've had a $10 movement in 3 days is what I'm getting at from these lows over here, no matter how you look at it. And that the value of the call is rising and going to get inflated like all calls do. And it's a 1340 call alert to sell into strength, 1340 call alert to sell into strength. Why? Because the public never sells them at the highs and they go down. And they don't sell in the high of moves over here and they go down. So you're always buying and selling it. So we're going to be watching that 1340 call. Okay. Another one that we're going to be watching for February, this one here is getting really top. That's a 1325. And you can see here that the volume was 1,451 with an open interest of 35,385 contracts right up here at the inflated area. Yeah, they were inflated before. Back on 114, let's take, I mean, not 114, yeah, it'd be 1114. They were inflated at 3150 and they went straight down to 820. Because we were buying those dips at that time. Not only that, the very same call here was buyable again going into that year-end little movement they had here. So we're inflated. 1325 call alert, sell into resistance. The public never does sell here. They go down and they go down and they get marked down, they get marked up. That 1325 call has exactly 3,860 right here open, and that the high was 2510 and that the low was 2279. They closed it at 2304 MMT. So as we go watching, if the calls keep going a little bit higher, they're going to reach a point where they can't go any higher. And that 1325 call alert, sell into the rally, sell into the rally. $30 is the top end over here. And that high, the low was $30. And that was on 11/14. 31.50 being the high, but look what happened. Now, you can exhaust itself, but then the S&P 500 is going to have to continue its breakout. That's this one here. Okay? And in order for the calls to go higher, that would make the S&P 500 that much more overbought. And what I am giving an alert on is that the daily chart in our system in this S&P 500 bull rally to this top, and you can see it here on the daily where we started in the S&P. That's the top. We started here on a pullback. It started back over here. I can give you the date. The date is 10/4 of 2011 right here. And we started that bull rally. We took it higher. But when we pulled back, you had a bull rally. But here's where the bull rally started on the S&P. It started above this line right here. Because you have now taken out the top of this major reversal level over here. That was its last pullback with Greece and the rest of the world. Now that the rest of the world and stimuluses are in play in worldwide government banking systems around the world right now, is that we're getting multi-year highs, we're getting all that great stuff that stimuluses create. And we're overbought on the S&P 500. And overbought levels can last for a period of time. The period of time is taking a look at each rally that we did last year, MMTs, and we broke through these tops here. But the bull rally starts at 12,800. If we close below that area of 12,800 from this new bull rally, then that means it's not a full bull rally. Okay, so what I am going to tell people is that from that top, as it gets itself put in and at resistance levels, you're going to have a pullback because you're overbought. You can stay overbought for a period of time. The actual trading ranges intraday would return to a higher price volatility cycle. So we do want to make sure that we understand that when you're monitoring a very, very top-end resistance level, when you break out of those resistance levels, the upside is limited. So yes, I am telling people that we can break higher from here to a very extreme overbought process, and that would be on this daily S&P 500. Just give me one moment. Here is the 1325 call options, and we're also going to be taking a look here at the put option here, which is a 1350 put. And we want to keep this live, MMT, here and now. Happy Saturday to you. And once again, we really enjoy the S&P 500 alert service 1250 off of the 1350, and the 1350 put comes into play from the 1250 call up to the 1350 call to a 1350 deflated put. Is that yes, we're finally at the very low, and one of the most wonderful things that MMTs enjoy is being wholesale to risk entry. And yes, because of our discipline in price action and using our platform that we're going to show you again over here, is that I'm going to go in and give you some prices. And what I'm going to tell my MMTs is the following. Alert, S&P 500, alert, alert, half delta movement, 1354. We've got slightly above it, 1364 is going to be a delta at resistance. We got a 1.5 delta resistance line MMTs at 1273 on the S&P 500 resistance. That's going to be that up, that would be going up. And you at 1.5 delta, you would actually take out the high reversals that we were shorting the S&P in 4/28 2011 period to 5/1/52 period of 2011, where we had called major tops at that time in that bull rally cycle. So what I want MMTs to be very coherent of is that two full deltas ultimately in the cycle up, which is 38.26 points from here now, MMT. That's 1383 now on that S&P, and that would take out the calendar 2011 high, where we shorted that down, and we have all the live videos there for you people that would like to see why we're talking about bull rallies versus bear rallies, and what are the behaviors between the bull rally versus that bear rally, and what are going to be the set of data points that are going to get you from point A, the entry, to point B, the positive debit exit. And as a market maker, it's very important to understand that when these contracts were over here, when everyone was buying, they were $53 on the high, and that was on 1/30 of 2012, just a few days ago. But look, from the one-day cycle peak to the second to the third day here, that's the 9. So there's just like on a 3-minute, 369. Okay, so you're at the third daily bar, and at that time, contracts were $34, and people were buying 649 of them that day. Now, look what happens on Friday at that 1350 put. 1710 on the low. They walked it from the open of 2290 to the high of 2290, then walked it down to 1710 wholesale entry, MMT wholesale entry, and then selling back for that $1.50 profit. So you buy 10 contracts, you sell for $1.50, that's $1,500 market maker debit. That is the way that we do business. However, I gave you the upper end of extreme resistance level values. I will tell you that in the short term, that in our system, we are $9.56 away from support at a half delta of 1335 on that S&P. And you're right there now. You closed 1344.90. We're within 10 cents of it in our SMF platform as to where those support levels are going to hold and why. Another thing that I would like to say to MMTs is that a 2 delta pullback is 1306 on the S&P. Okay? And I will show some of these levels. And that's 2, but let's say you dropped from 1316, that's negative 1.5 MMT. Okay, so basically we would have to break below 1316 on the S&P, and that's minus 28.69 points, and that would be negative 1.5 ratio. That equals that dollar amount, when that's at 28.69. That's what it would take to get there. So definitely we would be looking at the 1.5 delta pullback within the bull rally breakout. But however, we're going to be looking at that 1350 put. We're also going to be looking at one that hardly anyone owns, and we're going to monitor this 1360 that's deep in the money at the moment. And we can already see down here that 20, yeah, all right, so it's a narrow range. They had a 2-1 opening at $40 and a closing. They had a close at $37.50 a contract. Then on 2/3 of 2012, they had an open. They had a markdown of $15 from the previous high of 40 down to 25. That means they took $15 premium out of that put contract during this bull rally, because they did. Now it's getting awfully cheap, and we're going to want to monitor it, because 3 days ago it had a market value up here of 61.80 on the high, and the open and the high was 61.80. It was that way all the way across the board. Buy and sell, same price, 2 contracts. Open interest, 147. Minority open interest on the contract, one that we got to watch. And I will also put that in there. Okay, so let's go to the February. Let's go to one of those support levels, and let's take a look here at the 1320 put alert service wholesale bid entry MMT alert high dollar price value on 1/30 2012. The high was $30.30. The current markdown value to that high right there on Friday 2/3/2012, 7.70 MMT alert. 1320 put alert wholesale bid entries. We're going to be making a market, and what have they done is that you can see the value of the markdown, and that markdown will end at a process based on how the S&P 500 trades and all of those price supports that I've given in this bull rally. Here is a weekly chart of the S&P MMT, and in our system, in bear and bull behaviors and bear and bull trends that we make markets in, because that's what an MMT does. They actually make a market within the market, and that's the public buyer and seller and high frequency volume computing machines that are used in the ECN mathematical pricing scripts that are used. And that our system has come back to the key level of where we were shorting over here during this time frame. And back over here was when we gave out an alert. We have the live video on StockMarketFunding.com. We called the top during that time at 1370.58, and we got net short right away because that was it. And that was positive 1 1/2 deltas in the yearly S&P formula last year. And we have that, and we are developing the new ones for 2012. What I will tell MMTs is that you're at a major diamond resistance level, and that short term, the upper end of the price level is going to be much more cautionary for the bull, and the bull needs to learn to take profits in the rallies, of course. Now, the higher that you go, the less buyer there has been at this level has not been seen for a long time. And one of the things that we look at in overbought bull rallies is that they get exhausted in price, and the prices have to come down in value. So therefore, we have a very high alert service. The people that would like reference to one of the alert services, please go to StockMarketFunding.com, type in the search box S&P 500 index. You'll find when we call the top, and we are putting out a cautionary alert for the bull run that we have in play in calendar 2012 with all the stimuluses and all the worldwide banks are working together. Hey, monetary policy makers are really doing it up. So that's what's driven us to this diamond area that we had shorted, and we have all the live video entries during markets, during that whole bottoming, and that's where it stopped, right at our 1075 handle. We went straight up, and now when you're going to break through a diamond resistance level, and I'm sorry to sound excited, but I get very encouraged at how the top end of a bull run will get in that overbought level and then have to have its normal retracement levels. And that means that they start and they go down in value from their tops. And when you break through the diamonds, is that I can tell you a delta movement for next week is 7.62. And if you take the closing print down here of 1340.2 that I have on a closing bar, let's make sure, no, let's get the right bar. The closing was 1344.9. And that means if you add a delta to that, so let's do the math. You go 13.44.90, and then you minus 7.62, and that equals MMT 58.29. What we'll be watching for is that we are putting out an alert service so that when markets do, when bull rallies do start to pull back, you'll know how to get that side of the tape. And then when the bull rallies pull back to certain price levels in the S&P as we move up, and that each resistance level is going to be much more challenging, alert, resistance level, alert, service at certain price levels. That 1369 handle is going to be extreme price. So the S&P does have some delta movements left in it. And we know that if we go up 3 deltas from here, if we were, you know, the system is going to alert us the right way, and it's going to tell us where that price action is going to have more resistance levels, learning how to sell into rallies. So so when you pull back, wherever we get the reversal, and when you come down, 1 delta, 2 delta, 3 delta, 4 delta, 5 delta is where the S&P is going to have support. And what is that line going to be? Well, it's somewhere, I don't know, let's see. Like I said, we will find out at this teeny line right here of what this value is going to, that's going to be your support level right there. And your top end level is when you break out, you're going to get exhausted at the high, then you're going to have reversal bar that would look like that. Next, here's a high, and then to confirm, reversal bar. Confirm, reversal bar. Gap below the high, gap below it, when it's overbought, reversal bar. These are the kinds of combinations, reversal bar, and you want them to start below, you want them to have a delta reversal, because a delta reversal is the beginning, but it's only a pullback to half of this bar right here, and that's going to be 1322.92. And as we approach these resistance levels, but you would break out 3 deltas would put you up, well, let's just do the math. You could get up there in the delta tree very quickly. Let me go take a look on our other system. You could get up there very quickly to, let's say, 1364 on the upside of the breakout here, MMT. So live, S&P 500 alert, S&P 500 alert, major topping pattern at alert, major topping pattern at alert. Overbought levels are in play. Cautionary levels have gone up higher for the investor and the bull during the shorter period within the actual weekly price structures. We are hitting a wall of resistance. MMT alert. MMT alert. We will continue to go through and look at our deflated put side, which means you have a call and put side imbalanced mathematical ratio that at some point, there's going to be where they hit the bottom bids, and I will give out prices because I love giving out those low bids. And then you would go up in value. And that's going to be based on how much breakout that you get on this weekly chart right here. All right. So we're right there. We break higher up here. We can test it. But we are already at a high level alert. And we're going to take up the risk management alert service is going to increase now, because that means that the people that are holding them are more at risk. S&P 500 alert, S&P 500 alert. We're going to be looking at the full combination value of put side market that is deflated in prices, only because we're starting to get to tops. And we have calls that we like, 13, so we're going to be looking at the value of calls, and that's going to be this side of the market. And why is the call side so inflated at tops? Here's a 1350 call right here that has a 950 level. It was buyable at 270. And so you can see that the current February monthly 1350 call strike has ways to go higher. Now, by understanding where extreme values were at $19.30, and they went down to the low of $2.40 in value, that's where wholesale markets are made with MMTs. And our market maker option engagement is within the buyer and the seller, and we're always buying wholesale and selling into them. So we're watching the 1350 call gap up into a beginning inflated area. I will draw a trend line for the MMTs. Here you go. There it is. And not only that, you've got that upper price target levels. If we do go up and hit the major resistance levels in price, we would be looking at breaking these highs over here, where this particular high, and I'm just going to give everybody the number, it opened on 425 when we were calling the high, and we have the live videos there on Stock Market Funding. Just, you can go find them. It's 1336.57. The high was 1364.56, and the low was 1331.47. They closed it at 1363.61. Okay, and that was this bar. Now, when we started the downward cycle, it was the first correction of that calendar year that we called in 2011. You pop right back up, tested the half bars, but look what happened. You had a 4-week resisting stop. What the MMTs can know is that when you break through bull rally resistance, weekly resistance, bull rally weekly price resistance levels going higher in price, you let that bull run right up there, but then you get short at the high, because that's when they're going to slide the bid, and it would look like a 3-minute. But you always want to start with confirmation bar, okay? So you always got to have confirmation on the reversal, and the reversals have to hold a resistance. They cannot close above them, because if they do break higher and close above it, then that means it's no longer resistance. It would become new support, and you could get up there to those higher price levels around 1383 or so on the S&P. That's 1383. That's a 100-point rally from the 1280 up to 1380 is a 100-point rally. So we're going to be monitoring from the actual dollar price, wholesale price, is where that top end of that it's not wholesale anymore. And that's where the price resistance levels and confirmation levels, verification models will come into play. And we'll use the system as the math will not change. And when the math changes, that's when the buyer, well, they left and the seller took advantage of them. Right now, well, on balance volume is very low. We're not here to talk about that. I'll talk about that with the MMTs. I will talk about buying wholesale and selling retail. And I will talk about bull rallies. They get exhausted. They pull back to support. You get your engagement with the wholesale bid and ask, and you let them break higher and go back up and challenge highs again. That's what bull rallies are going to be. This is phase 1 of the S&P 500 bull rally. Bull rally, high alert, overbought territory, high alert, high alert. Resistance levels remain within $50 of that extension. The likelihood of going and closing above 1375 is the key element of that mathematical point, where either you get bombarded with more sellers and that the exhaustion prices give a higher intraday reversal price action trading range.